I know how heavy this topic can feel, especially when you're living on a fixed income and every dollar has a job. When you hear tax season, you might immediately think of delayed refunds, complicated forms, surprise bills, or the fear that a small mistake could ripple into your Social Security or benefits. You're not alone. Many people feel that same knot in their stomach. My goal is simple. I want to help you feel steady, clear, and a few steps ahead so your 2025 federal tax return goes through as smoothly as possible in 2026 without unnecessary stress or costly errors. A little preparation now really can protect your refund, keep you from missing credits you qualify for, and help you avoid trouble that can interrupt the benefits you rely on. Let me walk with you step by step, like a friend who pays attention to the rules so you don't have to memorize them. We'll focus on the moves that matter most: getting your documents in order, making sure the right amount of tax is being withheld, choosing the fastest and safest way to get your refund, setting up your IRS online account so you're not stuck waiting later, understanding credits and deductions that might apply to you, and watching out for scams. Along the way, I'll flag where life changes can affect your taxes and your benefits, and I'll explain the safe actions you can take now so you're not blindsided later.
Let's begin with the simplest habit that pays off the most. Gather your documents early and keep them in one place. This might sound basic, but it's the difference between a calm filing day and a frantic scramble. Most of what you need arrives in January and February, and sometimes corrected forms come in a little later. You'll want to keep an eye out for the W-2 if you worked for an employer, and for 1099 forms if you had any other type of income. This can include 1099 NEC for freelance or contracting, 1099 MISC for certain other payments, 1099 INT for bank interest, 1099 DIV for dividends, 1099-R for pensions and IRA distributions, 1099-G if you received unemployment, and 1099-B if you sold investments in a brokerage account. If you're on Social Security, you'll receive the SSA 1099, which shows your total benefits for the year. If you're on railroad retirement, you'll receive the RRB 1099. If you had health coverage through the marketplace, you'll receive Form 1095-A. This is essential for reconciling any advanced premium tax credits, so hold on to it. If you have income from gig work or selling goods and services online, watch for a 1099 form from the platform. The rules around 1099-K forms for third-party platforms have been in flux, and thresholds may change again. But here's the bottom line. You must report taxable income even if a form never comes. Do not wait for a form to appear if you already know you earned the money. Keep simple records of what you brought in and what you spent to earn it, like supplies and mileage. If you sold digital assets such as cryptocurrency, make notes now about what you sold, when you bought it, and for how much. If you don't have perfect records, do your best to reconstruct them using your exchange history and bank statements. The IRS has been updating reporting rules for digital assets, and brokers may issue new forms in future seasons, so organized records will save you time and headaches.
I recommend creating one dedicated folder for all tax documents. It can be a physical folder on your desk or a digital folder on your computer. As each form arrives in the mail or email, put it straight into that folder. If you like technology, there are simple scanning apps that let you take a photo and store a PDF. You don't need to be tech-savvy. The goal is just to put everything in one place so you're not hunting later. The most common mistake I see is filing too early, before all the forms have arrived. People file, then a 1099 shows up late, and suddenly they need to amend their return. That causes delays, extra stress, and sometimes interest or penalties. Give it a little time to make sure you have everything. If you changed your name, got married or divorced, or moved to a new address, update your information with both the IRS and the Social Security Administration. Matching records matter. A name mismatch can trigger delays. A wrong address can send your mail to the wrong place. You can check your address on your latest IRS notice or by creating an IRS online account. And you can update your address with Social Security through your online Social Security account or by calling if that's easier for you. This one small step prevents a lot of processing hiccups. Next, let's talk about withholding, because this is where surprise tax bills and big delays often come from. If you owed money last time you filed, or if you received a very large refund, it's a signal that your withholding may not match your current situation.
This is common after a life change, starting a new job, picking up part-time work, getting married or divorced, starting Social Security, or beginning withdrawals from a pension or IRA. You want your withholding to be close to what you actually owe, so you're not hit with a big bill in April or waiting on a huge refund that could have been arriving in your paycheck or benefits throughout the year.
You can use the IRS Tax Withholding Estimator on the IRS website. It's a simple tool that asks for basic information about your income, filing status, and current withholding. It tells you whether you may want to adjust. If you work for an employer, you use Form W-4 to update your withholding. If you receive a pension or annuity, use Form W-4P. If you want taxes withheld from Social Security benefits, use Form W-4V. Many people like this option to avoid owing in April. If part of your 2025 income isn't taxed when you receive it, like self-employment income, certain investment income, or rental income, you may need to make estimated tax payments during the year using Form 1040-ES. These are quarterly payments that help you avoid penalties and a large balance due. For the 2025 tax year, the last estimated payment is due in January 2026, right before you file. A simple approach many people use is to set aside about 25 to 30% of each untaxed payment as it comes in. If that percentage feels too high or too low for your situation, the IRS estimator can help you refine it. Another way to reduce penalty risk is the safe harbor rule, paying in at least a set percentage of your current or prior year tax. If that sounds complicated, don't let it scare you off. The estimator and a brief conversation with a preparer can make it straightforward. Let's shift to refunds and timing, because I know many of you depend on that money to catch up on bills or set something aside for the year. The fastest and safest way to get your refund is still e-filing your return and choosing direct deposit. That puts the money directly into your bank or credit union account and avoids postal delays or lost checks. To set this up, you'll need your bank's routing number and your account number. You can find these in your online banking or at the bottom of a paper check. If you don't use a bank or credit union, consider opening a low-cost account at an FDIC-insured bank or a federally insured credit union. There are also some prepaid debit cards and mobile accounts that accept direct deposit, but make sure you enter the correct routing and account numbers and that the account can receive tax refunds. Refunds sent to a wrong or shared account can get delayed or returned.
Under normal circumstances, the IRS issues most refunds from electronically filed returns with direct deposit within about 21 days. That said, processing can take longer if the return needs extra review, and the IRS moves more slowly when the volume is highest near the deadline. Filing earlier, after you have all your forms, usually means smoother processing. If you claim the Earned Income Tax Credit or the Additional Child Tax Credit, federal law requires the IRS to hold those refunds until mid-February to verify income and fight fraud. In those cases, many people receive their refunds in late February or early March. That's normal and not a sign that you did anything wrong. It's just how Congress designed the system to protect these refundable credits. I also want to talk about the IRS online account. If you don't have one yet, consider setting it up before tax season rushes in. Think of it as your secure tax dashboard. You can see your balance, view past tax returns, confirm what the IRS has on file for your wages and income, download transcripts, and set up a payment plan if you owe. If you're missing a form, sometimes the wage and income transcript can help you see what was reported under your Social Security number. To create an account, you'll have to verify your identity using a photo ID, and sometimes additional steps are required if you've frozen your credit or if your records don't match easily. Doing this early avoids last-minute frustration. Many people also opt in to an IRS Identity Protection PIN. That's a 6-digit number the IRS requires on your return to prevent someone else from filing a fraudulent return in your name. You can opt in through your online account, and it's a powerful layer of protection, especially if you've experienced identity theft or received confusing mail in the past.
Now let's look at credits and deductions that commonly apply to families and older adults. For 2025, the Child Tax Credit continues to exist for children under 17, with the refundable portion, called the Additional Child Tax Credit, adjusted for inflation each year. Recent years have had the refundable part increase slightly. For example, the refundable maximum was $1,600 for 2023 and $1,700 for 2024. We'll need to see the official IRS figures for 2025, so use this as a reminder to check the current year's amounts when you file. Not everyone qualifies for the full credit, and the refundable portion is subject to separate limits.
There is also a credit for other dependents who don't qualify for the main child tax credit, such as older children or certain relatives you support. If you pay for child or dependent care while you work or look for work, the child and dependent care credit may apply. The amounts and rules are stricter than during the temporary pandemic expansions, but it can still help. If you or a dependent are paying for higher education, look into the American Opportunity Credit and the Lifetime Learning Credit. The American Opportunity Credit applies to undergraduate education for up to 4 years per student, while the Lifetime Learning Credit can apply to a wider range of education at any age. The rules have income limits and documentation requirements, so save 1098-T forms from the school and receipts for qualified expenses.
Many people ask about home and energy credits. If you made certain energy-efficient improvements to your primary home, such as installing qualifying windows, doors, heat pumps, or insulation, you may be eligible for an energy-efficient home improvement credit, with annual limits that reset each year. If you installed solar panels, a battery storage system, or other qualifying clean energy items, the residential clean energy credit may apply. If you purchased a qualifying new or used clean vehicle and meet the income and vehicle requirements, the clean vehicle credit may be available. Some of these credits can now be transferred to the dealer at the point of sale, which can reduce your cost up front, but you still need to meet the annual tax rules when you file. Keep every receipt and product certification statement. Policies evolve and eligibility is precise, so verify the 2025 rules on the IRS website when you gather your paperwork. Let's talk about how taxes connect to benefits, because this is a big worry. Your Social Security retirement benefits are not reduced just because you get a tax refund. Refundable tax credits like the additional child tax credit and the earned income tax credit generally are not counted as income for certain federal programs when you receive them. In recent years, federal law has also excluded refundable credits from counting as resources for a period of time for programs like SNAP, SSI, and Medicaid. That said, every program has its own rules, and states have their own processes. If you receive SNAP, SSI, Medicaid, or housing assistance, keep documentation of your tax refund and credits. If you're ever asked to verify, you can show the letter and the deposit. If you're worried, double-check with your benefits caseworker or the program's helpline. It's always better to ask and document than to guess.
One important connection is Medicare premiums. If your income rises, your Part B and Part D premiums can be subject to an income-related monthly adjustment amount, known as IRMAA. Taking large withdrawals from retirement accounts or realizing large capital gains can raise your income for that year. If a life-changing event caused a temporary spike in income, such as a retirement, divorce, or loss of pension, you may be able to request a reconsideration of IRMAA. I'm mentioning this so you can plan, not to scare you. If you're carefully budgeting withdrawals or planning a one-time sale, factor in that it could affect Medicare premiums down the line. A little planning and a conversation with a tax preparer can help you avoid surprises. If you need help filing, you have options. If your situation is more complex, you can use a credentialed tax professional, such as a CPA or an enrolled agent. The IRS maintains a directory, so you can look up someone with the right credentials. Always ask about fees up front, and avoid preparers who promise huge refunds or want to deposit your refund into their own account. If your return is straightforward and your income qualifies, the IRS Free File program connects you to participating software providers at no cost. If you're in the military community, MilTax provides free software and support built around military-specific tax issues. Older adults can also look into volunteer income tax assistance and tax counseling for the elderly programs, often hosted at community centers and libraries. These are IRS-partnered programs offering free preparation for those who qualify. The IRS's separate direct file pilot has changed from year to year. Availability for the 2026 filing season may be different depending on government decisions, so check irs.gov for up-to-date information when the season opens. Remember that filing an extension gives you extra time to file the paperwork, not extra time to pay. If you think you'll owe, make a payment by the April deadline to reduce interest and penalties, even if you plan to file the full return later. If you end up owing and can't pay in full, don't ignore it. The IRS offers payment plans, including short-term and long-term options you can set up online in many cases. The sooner you set up a plan, the more you can control the costs. I also want to briefly cover an overlooked topic, the Treasury Offset Program.
If you have past due federal or state taxes, certain federal debts, overdue child support, or other qualifying obligations, your refund can be reduced to pay those. If you're worried this might affect you, you can contact the agency you owe to verify, and, if appropriate, set up a payment plan before filing so you're not surprised. If your refund is offset, you'll receive a letter explaining what happened and which agency was paid. Now, a gentle but firm warning about scams, because they spike during tax season. The IRS will not call, email, or text you demanding immediate payment or asking for personal information, like your social security number, bank account, or IP PIN. If someone contacts you out of the blue and pressures you, that is almost certainly not the IRS. Do not click links, do not respond, and do not send money or gift cards. Go directly to irs.gov and use a phone number or link from there. Real IRS notices come by mail, and they list a notice number and instructions you can verify. If you're unsure, you can also ask a trusted friend or preparer to look at the notice with you before you take action. Consider opting in to the IRS Identity Protection PIN program, which prevents others from filing a return using your social security number. Store your IP PIN in a safe place and never share it in response to an unsolicited call or email.
Let's pull this together into a simple plan you can start today. First, start your tax folder and drop in every form as it arrives. That includes your W-2, any 1099s, your SSA 1099, your 1099-R for pensions, and your 1099-A if you had marketplace coverage. Don't file until you're confident you have everything, and watch for corrected forms in February. Second, review your withholding using the IRS Estimator, especially if you had a big bill or a big refund last time, or if you had changes in work, family, or retirement income. Update your W-4 at work, your W-4P for pensions, or consider W-4V for Social Security if that helps you avoid owing. If you have income without withholding, plan for estimated payments so you're not stuck later. Third, set up direct deposit for your refund and confirm your routing and account numbers. If you don't have an account, consider opening one now so it's ready. Fourth, create your IRS online account, and if you wish, opt into the IPIN program. Do these steps now, before the rush, so you have time to troubleshoot without pressure. As you gather paperwork, make notes for any credits you think you might claim. If you made energy-efficient improvements, keep receipts and product details. If you paid college expenses, hold on to the 1098-T and any book or fee receipts. If you claimed the Earned Income Tax Credit or Additional Child Tax Credit, be prepared for the mid-February refund timeline and know that the delay is there to protect you and the program. Along the way, keep your eye on how taxes interact with your benefits. Your Social Security retirement benefit isn't cut just because you file a tax return or receive a refund. Refundable credits usually aren't counted against you for certain benefits, at least for a period of time, but it's wise to keep records and ask your program if you have questions. If you anticipate a big change in income that could affect Medicare IRMAA, plan ahead and talk to a preparer about ways to minimize surprises or whether a life-changing event appeal could apply.
I know this is a lot of information, but when you break it down, it's manageable. You don't have to become a tax expert. You just need a few steady habits and the confidence to ask questions when something doesn't look right. And remember, you have rights. You have the right to a clear explanation of what you owe and why. You have the right to pay only the tax legally due and to claim credits you qualify for. You have the right to representation if you need it, and you have the right to privacy and protection against scams. Understanding these rights helps you stand on firm ground. Let me end with a clear summary. The best way to reduce stress for the 2026 filing season is to start early. Put all your tax forms in one folder as they arrive. Update your address and name changes with both the IRS and Social Security so your forms match. Check your withholding now, especially if you had a surprise bill or a very large refund last time. If you receive income without withholding, consider making estimated payments so you're not caught off guard. Choose e-file with direct deposit to get your refund faster and safer. Set up your IRS online account and consider an IP PIN to protect your identity. Keep records for any credits you may claim, like education, energy improvements, or the child tax credit. Be patient if you claim the Earned Income Tax Credit or Additional Child Tax Credit. Refunds with those are legally held until mid-February. If you need help, use a qualified preparer or free reputable programs. And if something feels off or too urgent, step back and verify. Scammers count on panic.
You're not alone in this. Many people your age, on retirement income or benefits, feel exactly as you do. But you can do this. If you take these steps in small pieces over the next few weeks, you'll go into tax season calmer, prepared, and in control. You'll be less likely to miss a credit, less likely to face an avoidable delay, and less likely to run into preventable problems that interfere with benefits you rely on. Here's your next step. Today, start your folder and write a short checklist. W-2 if you worked, SSA 1099 for Social Security, 1099-R for pensions or IRAs, 1099 int or 1099 div from banks and investments, 1099-B for investment sales, 1099-G if you had unemployment, and 1095-A if you had marketplace insurance. Add any 1099s from gig work or sales platforms. Within the next week, visit the IRS website to try the Tax Withholding Estimator and decide whether to update a W-4, WP-4, or W-4V. Double-check your bank account details for direct deposit, and set up your IRS online account when you have a quiet half hour. If you prefer help, call a reputable preparer now to get on their schedule before the rush, or look up a local free tax help site if you qualify. If you found this guide helpful, share it with someone you know who's feeling overwhelmed about taxes. It's amazing how small steps today can prevent big worries tomorrow. If you have questions, ask. I'll do my best to point you to the right resources and explain what the rules really mean in everyday language. This is general information intended to help you prepare. It's not legal, tax, or financial advice for your specific situation. Tax laws change, dollar amounts can be updated for inflation, and state rules differ. Always check the current guidance at irs.gov or consult a trusted tax professional if your situation is complex. You deserve clarity and support, and with a little planning, you can move into the 2026 tax season feeling informed, reassured, and ready.